Good day, ladies and gentlemen, and a very warm welcome to the Praj Industries Limited's Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Anuj Sonpal from Valorum Advisors. Thank you, and over to you, Anuj.
Thank you, Ali. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorum Advisors. We represent the investor relations for Praj Industries Limited. On behalf of the company, I'd like to thank you all for participating in the company's earnings conference call for the first quarter of financial year 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decision. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Shishir Joshipura, CEO and Managing Director, and we also have Mr. Sachin Raole, Chief Financial Officer and Director of Resources. Now without any further delay, I request Mr. Joshipura to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good afternoon, everyone. I welcome you to the Praj Industries earnings call for Q1 FY23. Thus, all of you had the opportunity to go through our results presentation for the quarter ended 30th June 22. It is once again a pleasure to connect with all of you. Let me now briefly take you all through the quarterly business highlights and industry developments, following which Sachin will take you through the financials. We closed the first quarter of FY23 on a strong note with a healthy and delivery volumes, despite challenges around volatile commodity prices, impact of war in Europe, and rising global inflation. This quarter was a confirmation of our ability to scale up delivery capabilities, managing the uncertainties in supply chain while striking a fine balance between building in-house capabilities and outsourcing. With stabilizing commodity prices and supply chains and increasing focus on sustainable energy transition, business environment is expected to be less volatile and more predictive going forward. Uncertainties in global energy market attributable to the war has brought to fore dire need for energy security. Record high temperatures and heat waves across Europe and North America have come in as a stark reminder of climate change. We needed one, redrawing focus on sustainable climate action in the form of energy transition. In response, nations and corporates around the world are taking definitive steps in harnessing renewable energy resources in their pursuit of carbon intensity reduction. There is increasing demand for low carbon energy sources, and biofuels are gaining increasing acceptance as one of the most promising solutions. Globally accepted mechanism of carbon trading is poised for introduction in India, which augurs very well for the biofuels industry. Capacity addition for production of ethanol in India at the back of advancement of E20 target to 25-26 continued its momentum. The ethanol blending in petrol in India has crossed 10% mark in this quarter, 5 months ahead of the plan. Indian automotive manufacturers are gearing up to adapt their products to E20 and subsequently to flex fuel options. As for the existing vehicles, tests and trials are underway to analyze compatibility of materials to adopt to E20. Our bioenergy business continued its strong performance with a healthy order book of Indian rupees 845 crores in this quarter. Around 70% of these orders are for ethanol based on starchy feedstock. Unlike in the past, execution activities are in the top gear in the very first quarter of this fiscal at multiple project sites in different geographies. On international front, our efforts in providing solutions for low carbon and low energy intensity ethanol are opening newer options, and inquiries have started to build up. We have enhanced our reach in Europe, South and North American markets to address this emerging need. Our first project in Brazil is scheduled for commissioning at the end of this year. We have successfully demonstrated the effective impact of our process enhancer solution in Brazil. Both these events will definitely help improve our position as we move forward. On the 2G front, commissioning of IOCL project is in the final stage and of startup for commissioning, and we expect it to start operations by end of this year. Although we continue to be in dialogue with potential developers of 2G projects in Europe, uncertainties owing to the prolonged war have added nearly 2 to 3 quarters to the decision cycle time. In the mid to long term, with several nations pursuing energy security based on captive resources, advanced biofuels are expected to find good traction. In Europe, passing of RED III proposal will provide further boost to the demand for 2G ethanol. Sustainable aviation fuel or SAF space is building up for exciting times in near future on the back of rising environment awareness and climate actions by aviation players. Recently, Praj joined Mission Possible Partnership, MPP, International Alliance to pursue net zero aviation. Praj is working closely with MPP in helping formulate an energy transition strategy aimed at cleaner skies. Praj has actively contributed to the formation of a landmark report making net zero aviation possible and industry-backed 1.5 degree centigrade aligned transition strategy. On the CBG front, revised CBG prices and better rates for organic manure will help improve the attractiveness of the projects. Although little slower than expected, build-up of ecosystem across the value chain is now taking shape. Major corporates have announced plans for significant investment in the CBG space. This quarter, we commissioned a CBG plant based on industrial effluent as a feedstock. With this, we now have CBG products open feedstocks, namely pressed mud and industrial effluent in North, South, and West India, with a rice straw-based system expected to be commissioned in the next quarter. With our unique capabilities and learning from these initial projects, we are in a good position to cater to these emerging opportunities. As for engineering and PHS business, we continue to see momentum by way of healthy order book and improving inquiry basket. The CPS front, energy transition needs of global customers are creating significant opportunity for this business. Energy giants are investing heavily in blue and green hydrogen projects to address the growing demand of this zero carbon fuel. This is creating a significant opportunity for CPS business. Our capabilities to conceptualize, design, and manufacture complex modules required for these production facilities is finding increasing acceptance from leading customers across the globe. Modularization is emerging as a growth engine for business with significant growth in inquiry base. We have made operational additional capacity in Kandla to cater to this growing demand, and further capacity enhancement is being planned. On the brewery front, the beer consumption levels across the country are back to pre-pandemic levels and are even crossing it. The new capacity formation is expected to follow from next season. On the PHS business front, as Indian pharma industry transits to global size capacity build in biopharma space, fermentation technologies are set to acquire center stage. Leveraging the parent's capabilities in fermentation space, we have made a few initial breakthroughs in this application space for high capacity fermenters, and this will further grow. RCM program at Praj Industries is accelerated due to ban on identified single-use plastic items from 1st July 22 by the Ministry of Environment, Forest and Climate Change. India's per capita waste generated from single-use plastic is 4 kg per annum per capita. This ban will now lead to a significant change in demand for compostable plastic as it mitigates pollution caused by littered single-use plastics. Continuous focus on developing innovative technology and ring-fencing them with protection has resulted in international and domestic patents tally now crossing a formidable 400 mark for Praj. Before I end, I would like to share with you a couple of awards that we won. Last month, Praj was bestowed with the prestigious Golden Peacock Award in the Innovative Product and Service category for our groundbreaking product, BioSyrup. Praj was also rated as top company and conferred with Fortune India as the next 500 in the engineering sector. This award is a recognition of the remarkable growth and stellar performance among the most promising mid-sized companies in India. With this, I will now hand over to Sachin for his comments on the financial performance.
Thank you, Shishir, and good morning all. The consolidated income from operations grew by 89% and stood at rupees 729 crores in quarter one of FY23 as compared to rupees 386 crores in quarter one of FY22. PBT for the quarter stood at rupees 54.23 crore as compared to 29.8 crore in the corresponding period of the last year, growth of 82%. Profit after tax stood at rupees 41.26 crore in Q1 of FY23 as compared to rupees 22.20 crore in Q1 of FY22. Export revenues accounted for 16% for Q1 of FY23. Of the total revenue, 77% is from bioenergy, 17.3% from engineering, and 5.7% is from PHS business. The order intake during the quarter was rupees 1,094 crore with 81% from domestic market. Of the total order intake, 77.2% came from bioenergy, 17.3% from engineering, and balance 5.5% from PHS business. The order backlog as of 30th June 22 is at rupees 3,242 crores, comprising of 84.5% of domestic orders and balance export orders. Cash in hand as on June 30th, 2022 is rupees 652 crores. I now conclude my remarks and I would like to thank you all for joining us on this call. We are happy to discuss any questions or comments or suggestions you may have. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhanaraj Bagrodia from ASK Investment Advisors. Please go ahead.
Hi, sir. Thank you for taking the time out. Wanted to ask you, what are the IRRs someone would expect?
Dhanaraj Bagrodia from ASK Investment Advisors. Please go ahead with your questions.
Hi, can you hear me? Hello? Hello, can you hear me?
As there is no response, we
Hello?
move to the next
Hello?
question from the line of Saurabh from East Lane Capital. Please go ahead.
Yes. Hi, sir. Thanks for the opportunity. I have 3 questions. The first one is on the 1G opportunity. The total capacity needed for 20% blending was 1,500 crore liter when we started off, like say in FY20. That time the existing capacity was about 700 liter. And the incremental capacity needed was 800 crore liter. So based on last 2-year annual reports, about 700 crore liter has already happened. So the remaining capacity to be ordered is 100 crore liter. Is this math correct, sir? And could you just clarify on the 1G opportunity which you see in India right now? That's my first question.
Thank you for that question. As you correctly said, we had estimated that roughly 1,000 crore liters of additional capacity needed to be created in the country when the program was announced and then further accelerated to 25 for the EBP 20 goals to be met, right? And we expect another of the order of 400 to 500 crore liters capacity to be further built to be able to meet the EBP 20 targets by 2025.
Okay, got it, sir. So 1,500 crore liter was the total required and 700 was the existing capacity. So the incremental is only 800 crore liters, right, sir? And your annual reports of last 2 years is mentioning 700 crore liters already happened, and last year itself 580 crore happened. So where is the incremental 400, 500 crore liter? If you could elaborate, sir, please.
So what happens is that the capacity of the plant, because some of them they have a seasonal factor, they don't run 365 days a year. So the installed capacity may be a little different than the operating capacity. So typically we have seen that something in the range of 70 to 75% of the installed capacity that comes into play. There could be some other, because this is based on agrarian feedstocks, plant operating issues. So typically at about 70% of the installed capacity is what you get the output for. And if you do that math, we are looking at something like another 500 odd crore capacity to be created in the country as we move forward.
Okay, over the next couple of years probably, right, sir? Couple of years or 3 years.
25, that is for meeting the EBP 20 goals, right?
Right.
Now, let us say as we move forward and another set of measures, let's say for example, a flex fuel policy comes into play, right? If that comes into play, then that is an additional demand that will get created because then from against 20% of blending, we will go to some position of 85% ethanol as the fuel, right? So depending on how the overall, the numbers that you talked about are only as they relate to meeting the goals of the EBP 20 program.
Got it, sir. Got it. And sir, also could you highlight the opportunity for 1G in Brazil and Latin America?
Yes. Brazil, as you know, is predominantly a sugarcane-based ethanol producing country, but they have also taken a decision to, because of the vast geography and what I would call as a large-scale movement that got involved in transferring the sugar-based ethanol from one end of the country to the other. Especially in the northwest of the country, the central parts of the country, where corn is available in abundant quantity, the government policy has now shifted to also create corn-based ethanol, and that is what is creating the 1G corn-based ethanol opportunity in that market as of now. And coupled with that, Brazil also launched the Renova Bio program, which is aimed at lowering the carbon intensity and making the country independent over a period of time from any imports of fossil fuels. So if you look at the combined effect of this, Brazil should create a capacity equal to almost 500 crore liters based on corn as feedstock over the next 4 to 5 years. And that is where this significant opportunity is being created right now on corn-based. And as I had mentioned in my opening remarks, we have already shipped, the plant has arrived, it is under installation for our corn-based plant in the country. In the rest of Latin America, different countries have different blending mandates, and based on those blending mandates, we are expecting some movement, positive movement there as well. We are building a very significant scale plant in Paraguay already, and that is under execution right now. So depending on how, and as I was mentioning, in general, the trend is to move to higher energy security and therefore higher biofuels in the mix of any country's energy mix. And we continue to see traction being built around these in Latin America. In North America, the situation is slightly different. In North America, the demand, because of some very efficient market mechanism, the carbon trading LCFS program in California, for example, the need and demand for low carbon intensity ethanol is high. And that is something that is building up now at the back of also a fact that US is also seeing a lot of traction being built around creating capacities for SAF, where ethanol becomes in the technology, one of the technological pathways that are available uses ethanol as a feedstock for end product of SAF. Given this intermixing of having the mechanisms, carbon trading mechanisms, carbon pricing mechanisms, 1G ethanol already in place, there is a market that is now opening up for creating low carbon intensity ethanol, and all the existing plants actually are a candidate for creating that through integration intervention as well as then defining some different set of energy solutions for them. And that is what we see as a clearly emerging opportunity in the United States.
Got it. So I have one last question.
Sorry to interrupt. May we request to come back in queue for follow-up questions? Thank you. Participants are requested to limit their questions to 2 per participant. Time permitting, you may come back in the queue for a follow-up. The next question is from the line of Levin Shah from ValueQuest Investment Advisors. Please go ahead.
Thanks for the opportunity and congratulations, sir, for a good set of numbers. My question is on order inflows for this quarter. So if you look at the bioenergy order inflow, there has been a dip versus last quarter of around 15%. and absolute number is close to 840 crores versus 1,000 crores last quarter. So, is there been this is on account of lower orders that we booked on the 1G side?
No, you said 50% drop. Where did you get
15%. 15%.
15?
Yeah.
So we don't see any dips in the order book or opportunity as they are flowing now. As we follow pretty strict rule of what gets reported as order book, what you are seeing. So it's fairly at the same level. The overall order book is at 1,094 crore this time. I think what was there in the last quarter order book that we had reported, there's a large export order that was also booked under the bioenergy segment there. In this quarter, we do not have that, but as we move forward through the year, we will see them happening as well. Also, there is a seasonality, especially for the sugar-based ethanol plants, right? So there's it's not that in the volumes that we are now reporting. All the projects have shifted to starchy projects. About 70% is now starch-based, but 30% is still sugar-based. And since there is a seasonality factor there, there may be minor variation on a March quarter to the June quarter, but nothing else to read in that.
Understood. So, since we had in the base quarter exports order, if we exclude that, then we would have probably done a similar amount or better.
Yes, that is correct.
Right. Sir, and on the engineering side also, we have seen good order inflow during this quarter as compared to what we have seen last full year. So, was there any exports order or any large order that we have got under the engineering business?
Yes. So as I was mentioning, for our CPES business, the energy transition phenomena is creating significant opportunities, especially the green and the blue hydrogen space, as well as all the activities that is now taking place around the LNG and the CNG space, especially in Europe and America. So that's creating a very positive traction. And as I was already mentioning, our capability to conceptualize and design and manufacture a modular system for these plants is something that is standing us in good deed, and you actually see that being reflected in the growth of the engineering order book in the quarter. And all these contracts for CPES are meant for export.
Right. So this number we have reported this quarter of around 186 crores engineering. So this should improve from here as we get more exports order on the CPES side.
Yes, more or less, yes, you are right, Levin.
Right. Sir, and last question on the other expenses. So this quarter, what we have seen is that YOY, the other expenses have almost doubled. So is there a component which is related to the execution and that has resulted in this kind of jump, or is there any fixed costs which have gone up?
There is nothing extraordinary sitting in the other expenses. It is the direct function of the execution which we are doing. So if you look at the top line has also gone up by 2 times. So it is basically the variable expenses related to the project execution. There might be some element of extra transportation or a freight cost, but that's a very minimal. It's nothing extraordinary.
Understood. And this trend should continue. I mean, with the execution, our other expenses should follow the trend.
That's right.
Okay. Thanks a lot, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Dhananjay Bagrodia from ASK Investment Advisors. Please go ahead.
Hello. Hi, can you hear me now?
Yes.
Hello.
Yes, good morning.
Yeah. Good morning. Good morning. So I wanted to ask for a CBG plant, what is the IRR the asset owners are getting now?
So I will not be able to put a number to you directly because there are so many variables, right? What's the cost of feedstock? What's the availability of utilities? At what cost they are available? Are they co-located versus independently located? So I would not. It would be hazardous to guess a single number for them. But let us just say that now the CBG projects are in decent 2-digit IRR range, where it is possible for them to be commercially attractive and be funded by banks.
Okay. But is there, because for our next leg of growth, CBG would be an important phase. Is any particular IRR asset owners are targeting? Because right now it's been only OMCs who have taken the lead. But for private to go, they also have to see some decent IRRs, right?
No, so actually the plants that we have set up are with private sector only. The public sector plant is still under commission to be commissioned. So all the 3 plants that I mentioned to you are in private sector, and depending on the cost of capital, their access to funds, how their funding structure is, I think everyone has their own internal hurdle rate that needs to be overcome. And obviously, as we see it moving forward with these changes, which are positively impacting the IRRs of the project, one should be in a position to see more number of corporates meeting their hurdle rates and therefore stepping up into this arena.
Sure. And would it be fair to assume that all of these players who have taken the lead would be someone who is using this as an ancillary segment, vis-a-vis putting a new plant as a new asset, right?
Sorry, I have not understood your question, please.
No, so they must be doing all of these 3 plants which are there right now, must be players who are already in an ancillary business who are using that as a raw material to put up these projects, right?
That is correct.
Okay, sure. And sure, I'll just come back in more for questions later. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Naushad Chaudhary from Aditya Birla Asset Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just a clarification on the margin side, sir. You have been indicating that the pain will be there till the 1Q of 23. So should we, the current quarter, should we look at as a bottom, and should there be an improvement sequentially on the margin side? That's the first question. Or is there any pain still left which should come in 2Q?
Rather, since last 2 quarters, we are maintaining that we will be seeing some kind of a pressure. Rather, this pressure got little bit built up during the first quarter when we saw a very erratic kind of a movement in the commodity prices happening in the month of February and March. The impact, we said that will continue for not only this quarter, to some extent to the next quarter. So the H1, we will have some kind of a pressure, but H2 should improve as compared to H1.
That assumes that there will be no further,
of course,
negative movements on the commodity side.
Okay, but shouldn't be as bad as this quarter was in terms of gross margin. Should there be an sequential improvement?
Sequentially, we should see some improvement because this quarter we had very low component of exports revenues getting booked also, which will get covered in the next quarter. So we will see some kind of a relief on that account. But the pressure on the margin side because of the commodity price movement will continue at least for next 1 quarter.
And on a 2 years time frame, what is the number one should look at in terms of your EBITDA margin?
No, sorry, we will not be able to give you that kind of a guidance per se, but we will definitely see an improvement because all these orders are basically getting executed, and new orders are coming with the new pricing in any case. And of course, the stability which we are seeing right now in the commodity prices should not disturb the margin side going forward. That's what I can tell you.
Okay. Lastly, on your high purity segment, what is the demand outlook here, and what kind of growth you expect from this division?
So as I was mentioning, that we see a clear movement around creating fermentation-based capacity on the manufacturing side of the drugs, and that actually augurs well for the business. The other capacity creations, of course, will continue to serve the businesses as far as our water and process side systems are concerned. But now with the advent of this, we do expect that the things will start to move even more positively in favor of the business, so that we are able to leverage the competency that the parent company has on fermentation, and then use that as a knowledge base and combine that with the capability of the PHS business, as they understand the pharmaceutical business very, very well. So we will be able to then combine their understanding of markets and customers and the parent's capability around fermentation and leverage that to good effect.
Actually, I just want to understand the scalability piece of this segment. Do you think so last year we did around 200 crore rupees of business on this segment. Is it really scalable? Can we see a doubling of this segment in a couple of years, or will it be near to 200 to 50 odd numbers only?
So one of the features of this business is that it serves a single segment, right? So that in that sense makes it what I would call as a slave to how the growth in that industry takes place. But what is important is within the same industry growth space, now we see a space being created for fermentation technologies, and that, as I was mentioning, which will definitely expand the market. Initially as yet, so I may not be able to put a number out as you are saying, but definitely in the positive direction.
All right. Thank you. That's it from my side, and all the best.
Thank you.
Thank you. The next question is from the line of Haresh Hinduja from SVS Securities. Please go ahead.
Congratulations, management, on the very good set of numbers. Sir, I have two questions. First is on in last week, or maybe this week only, there's an article in the paper about Adani and Ambani entering into a CBG. Your take on this?
So as I mentioned in my remarks as well, that this augurs well that when some very significant players in the energy segment decide to build this also as part of their business portfolio, it fundamentally means that the markets are becoming attractive and that there is a definitive commitment as we move forward. I think this is a very important development for the overall growth and health of the market.
No, but is it true? I mean,
Well, I cannot sit on judgment on news around.
No, I'm just saying you because you must be knowing in the industry, right?
Well, we know. That's what I'm saying. So it's a good news, is what I said. We know that there's a dialogue that we have with both of them, and it's a good and positive development.
Okay, thank you. And the last question is, sir, there is this sugarcane. There will be an excess this year in India, and etc. etc. Previously, there was always some argument between fuel and food, fuel versus food. So is this means that there is a very good for the industry of ours, which has no issue as far as the feedstock is concerned? And why the sugarcane? They are saying there will be an excess. Is it not diverting more to the ethanol? Thank you.
So I think this is an argument that will always have to be taken into consideration. And as you rightly said, feedstock will be a very major issue that needs to be addressed in a constructive fashion.
Yes.
Right. So that's the fact. Now, given this background, I think what we have to see is that what are the different feedstocks. So as we were also mentioning earlier, that we are clearly seeing a shift away. So earlier, 3 years ago, everything was on sugar or sugarcane-based feedstock.
Okay.
Right? Then now we are saying 70% of the order book that we have booked in this quarter is now moved to starchy feedstock. So that's already one transition that is taking place. Okay. I was mentioning about lignocellulosic or straw-based ethanol plant being commissioned towards the end of this year. So that's a completely untapped source of feedstocks that will come into play. So up to another 20-25% kind of capacity, maybe starchy feedstock will play out. But then the further growth will happen based on the 2G or the lignocellulosic feedstock, as we call it, the straws, etc., that will come into play. So different, as we travel through the journey of fuels and different mixes and demands in the economy, I'm sure that we will start to see a changing mix of feedstocks as we go forward.
But isn't it good for us being excess sugarcane availability?
Yes, I will come to the other part. And then you mentioned that why is there excessive sugar and why that is not getting
Yeah. Mm-hmm.
Correct. So yes, you are correct. So there is a sugar price dynamics also at play because the other big producers of sugar in the world may have a different cycle. There may be drought there may be less production or excessive production, as the case may be.
Yeah.
So depending on that, obviously the world sugar market prices will also fluctuate. So the producers in India will have to think in terms of what is the product mix ideally that they would like to have to strike a balance for their own balance sheets and demands and needs of their company to be able to address the demands of sugar as well as of ethanol. from all calculation, it is very clear that even if all the India sugar demand is met by the sugar mills, we'll still be left with excessive sugar, which needs to be addressed. So one part is that you go and export that sugar, and second is that you, rather than producing that sugar, you convert it to energy, which is ethanol. And there has been several indicators, several initiatives from the government side to ask sugar mills to actually push that sugar for production of ethanol, which is what the country needs today. And I think it also enhances our energy security, etc. So I'm sure as we move forward, we will see a good balance being struck between the two.
No, but isn't it very good for a company to just save the juice with your new technology? Last year you introduced. So is it beneficial for them to export sugar or to save as a juice and then use it for the ethanol manufacture? I mean, to produce ethanol.
As I was mentioning to you, it depends on the price dynamics of sugar in the global market, right?
Okay.
And what happens to the other sugar producers? As I was mentioning, if there's a drought in Brazil, it's a very different dynamic for the sugar prices in the world as compared to Brazil having normal sugar season. So we'll have to see how that plays out. But you're right. And as I said, everybody will finally try and see what is the most optimal product mix for them, and they will act accordingly.
Thank you, sir. Thank you so much, sir.
Thank you. The next question is from the line of Levin Shah from ValueQuest Investment Advisors. Please go ahead.
Yeah, sir, a follow-up on CBG. So have we received any fresh order on the CBG front?
Sorry, I couldn't follow the question, please.
So have we received any new order on the biogas front during this quarter?
No. During this quarter, we haven't received any new order.
Okay. Sir, and how are you seeing in your dialogues with your customers or people who are interested in putting up this CBG plant post this price revision? Has there been a renewed interest, and do we see some kind of pipeline which can materialize maybe over next 2-3 quarters?
Yes, we are seeing an increased interest, and the activity levels have gone up. As we were earlier mentioning, somebody also asked saying what happens if these two big players enter the business with the intention to set up capacity. So I think those are clear positive signs. Some more clarity is required on how the overall dynamics will play out. As you know that the price increase has come into play only over the last 4 to 6 weeks. So we'll still have to see impact of that. But overall, we clearly see an increased level of activity in the market.
Right. And sir, lastly, on this CBG front, so what we understand is there are a lot of other suppliers as well in the market. So how do you see the competition panning out? Will we have dominant share when the orders start coming in, or this will be different kind of business dynamics versus what we have in 1G?
So Levin, I always believe that if there's competition, there's a good sign, because then that shows that there's a good potential that is developing, right? That is why people are wanting to jump into the fray. So that's a good sign to, because these are nascent markets. We'll have to see on how the market shares play out, and probably we'll have to give it at least 3-4 years kind of time frame for one to arrive at a market share position. But obviously everybody will try and push their own solutions and technology, and unless things are proven on the ground, I think once that whole cycle is gone through, then one will know which technology suits best. We strongly believe, given our pedigree, that we have the solutions, because a major question on this will also be the feedstock that was being asked in a different context earlier by one of the participants. What happens to that, the understanding on those feedstocks. These are several questions that are still to be answered, and only time will tell as to what actually works out. So market shares are really difficult to predict right now, but definitely the activity levels are improving.
Sure. Thank you, sir. Thank you.
Thank you, Levin.
Thank you. In the interest of time, participants are requested to limit their questions to 2 per participant. The next question is from the line of Divyanshu Sachdeva from White Oak. Please go ahead.
Hello. Yeah, am I audible?
Yes, Divyanshu.
Hi, sir. Thank you for the opportunity. Just one thing, in your high purity business, like you mentioned that there has been a new optionality in terms of fermentation, and currently you're also serving the pharma market. So just wanted to understand, can we also assume a new optionality in terms of semiconductors and new age tech companies as well? Because given the fact they are also in requirement of huge or high purity water, so can we take that as an optionality going ahead?
Yes, Divanshu, that's a very good observation. You're correct. The water that semiconductor industry will need is very close to what pharmaceutical industry needs. So having capability in that space will obviously put us in a pole position to address the needs of the emerging semiconductor industry as well.
Okay, and just one last more. So in the last con call, you mentioned a couple of new words, let's say clean tech or green tech, as well as carbon capture, and also today you mentioned on hydrogen also. Just wanted to understand from a longer term perspective, like how do you see Praj panning out in these segments as well?
So as I was mentioning to you, there are different solutions on the offer. So right now, so let's take hydrogen as an example. Globally, the movement to use the electrolyzer technology for production of hydrogen, green hydrogen, and also in several locations, people are producing blue hydrogen, which will fundamentally capture the carbon and separate it out and not let it go to atmosphere. That itself is creating a huge opportunity because we are able to conceptualize and design and manufacture a plant on modules which can then go and very quickly help start up these plants and not take long time of construction at site. So that's one clear opportunity that is emerging. The second, I was mentioning to you about the overall at a broad level, the low carbon intensity solutions that are required, whether in form of low carbon ethanol or we talk of CBG, which is also a low carbon intensity solution as far as CNG is concerned. So different product baskets out there. There also, as you know, we have a significant play and technology and experience to bring to the table and offer. Our deep understanding on the feedstocks will help us to address these needs in a good way. As and when, as I was mentioning, US already has a pretty advanced carbon pricing market. We don't have that yet, but as and when that comes, even that will open up several new opportunities. We already have a business offering which offers to customer capture of CO2, the biogenic CO2 out of our processes, which is considered to be superior grade. So there are several solutions that are available in our basket, and they're all on the offer to our customers depending on which segment needs want.
Sure. Thank you so much, sir, and all the best.
Thank you, Divansh.
Thank you. The next question is from the line of Kunal from BNK. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. Sir, I just wanted to get some sense. So out of the total capacity required to meet the 20% blending target, how much would have been already ordered out, sir?
So, as I was mentioning, when we started out this accelerated program, about 1,000 crore liters was to be created, and as we mentioned earlier, around 500 crore liters still needs to get ordered out. So we're at 1,000 mark.
Okay, so basically 50% we have reached.
In terms of ordered out, these are not built capacities yet.
Yeah, ordered out. And sir, you mentioned, if I'm not wrong, that out of this, about 70% is starchy, is what you mentioned?
I said that in this quarter that went by, we saw that 70% of the order finalizations were on the starchy feedstock and 30% on the sugary feedstock.
Now this 500 crore that is being ordered, so what would be the, your sense on how much would be sugar and how much would be starchy?
That's a tough one to say, but we clearly see, as I mentioned, that the shift is in favor of starchy feedstocks right now in India because that's obviously the feedstocks in terms of availability and volumes that are now available. Sugary feedstocks are very, very largely already captured in the ecosystem in terms of the sugar mills, and then it gets processed from there onwards. So sugary feedstock based growth may have a different dimension as compared to starchy feedstock.
Oh, sure. And so lastly, within the starchy feedstock, any specific feedstock that you're seeing more traction or more inquiries than others in terms of because of the better availability or it's more region specific?
So Kunal, starchy feedstock, I mean, for example, if you go to United States, it's corn and nothing else. Right? In India, that's not the case where we have broken rice as another feedstock that is available. We can also get maize or corn in parts of India. So that's a very local geographical solution. The key issue is that we are in a position to provide a solution irrespective of the feedstock.
Okay, great, sir. Thank you so much, sir. And best of luck for the future.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, Sisir Bhai and Sachin. Congratulations on good set of number and expect a bit good order book. Sir, my question is related to this flexi fuel what we are talking so to for a next leg of the growth for our company in 1G ethanol. So is that correct understanding that beyond 15% there has to be a change in the engine as well as the dispensing center by the OMC, and or it is at up to 20% this is workable?
As our understanding goes right now, the first stage that needs to be overcome is the EBP20 compatibility for the vehicle. As I mentioned that some tests and trials are underway to understand what needs to change in the existing vehicles. I won't name, but I was talking to one of the largest automotive companies in India, and they mentioned to us that their vehicles are default EBP20, just that they have not mentioned about it. So it depends on what the technology deployed by different OEMs when they manufacture their vehicles. So some of them, which are large multinationals, they told me that our vehicles are already suited at EBP20. Some may not be, and especially the very old vehicles may not be in a sort of condition to immediately accept it. And there also we know that some of the fuel train components will have to change in terms of the gaskets and the material rubber that is used, etc. But no major change is there. In terms of flex fuel, it's a different car or a different vehicle. So flex fuel vehicles will have to be, so we can't take the current vehicle and just start using it as a completely flex fuel vehicle. That is a slightly different technology, especially in the way the combustion is controlled, the compression ratios that are required to be brought into the engine, etc., etc. So those will have to be designed from, as I would call, first principles. So already in a big way they exist in the same brands and same cars in Brazil. So in that sense, it's a technology already proven on the road.
Okay, great. So how OMC will be affected, because if some of the vehicle if they go for 20%, some of the vehicle will not be really able to take that 20%. So do they have to set up a separate dispensing machine? And second thing, to make them more, what our government is doing to incentivize OMC to have a separate dispensing? Because currently, if you can throw more light on it, ethanol is under GST, whereas all the gasoline is under, say, old regime. So how do really, whatever 20% or beyond that also, if they go blending, so whether they have to, their rates, taxation will be on the blending rate, or it will say 5, if 20%, so 20% will be at the GST. So how, otherwise the government is making the whole money. So are we like what we did in playing as a facilitator role to, bring those kind of change in the system?
But as you rightly said, these are some of the issues to be resolved, where obviously number of ministries will get involved, OMCs themselves, and those are the issue. And I think this issue is also being taken up by the industry associations with the government. So it's a very involved dialogue, but obviously these questions will have to be answered as we start to move, and I'm sure that we will be able to find an answer. It's just sitting down and finding a logical answer to it, right? This is not rocket science, so we will be able. I'm sure that they'll be able to do it.
Okay, and all the best. Thank you.
Thank you, Brother.
Thank you. The next question is from the line of Sagar Kapadia from Anvil Shares and Stock Broking. Please go ahead.
Hello.
Hello,
Hello.
sir.
Hello, sir. Sir, I just wanted to ask you the technology solution we have come up with this bio syrup. So suppose if the plant is a 100 KLPD sugar plant and this is working for 7 months. Now it wants to work for the entire year. So how much capex will the client have to incur for this? And this capex with the client enter will be the revenue for Praj. And another thing on this, any recurring revenue Praj will get by supplying enzymes, etc. for this technology?
Yes. So if an existing plant wants to run for full year and therefore they would like to treat the syrup and store it and then use it for production of ethanol, they will need the biosyrup technology, which will entail a one-time plant modification and installation of a set of equipment, as well as recurring expense that may be required to be incurred on the what I would call as on the enzymes and some of the other performance enhancers, etc. So that both will be required as far as the operations of a biosyrup-based plant is concerned.
Okay. And so what will be the value, sir, one-time capex?
Well, that depends on...
KLPD, for say example, just 100 KLPD.
I would not be able to answer that on the phone because we are engineers, right? So we'll ask you 55 questions on what is the scope and what's the battery limit and what's the existing infrastructure and what's the existing facility, how much capacity is it got. So many questions to be answered. So tough call for me to answer on this, and all my proposal engineers will kill me if I give you a number. So let's stay with this. But yeah, it's not something. It's not something that it cannot be considered for economic viability. It's a big issue, and I think I keep on saying this to many customers. One is, of course, the fact that you will expand your asset utilization from 6-7 months or to around the year. The bigger one, in my opinion, is the fact that you drop the effluent generation volumes by a factor of 4 to 5, depending on where the current process is. So that is the critical part. I think that's very, very important to understand that this process also drops the effluent generation itself by a factor of 4 to 5, and that is a big positive for the customers when they consider.
Okay.
And then what happens is that by going through this route, you are also, in a manner of speaking, providing a flexibility for use of raw materials as to what they would like for the production of ethanol. Biosyrup itself becomes the feedstock then, isn't it?
Yeah, biosyrup becomes the feedstock. And sir, another question. I just want to hear, you said are you also in dialogue with Reliance and Adani for the CBG project?
I said in my opening remarks that we are seeing big corporates now announcing plans, which was there in the newspapers, and then somebody said, are you talking to them? And I said, yes.
Okay, so you are also in talk with them. So hope, sir, the rainfall which is coming for ethanol plants starts coming in the CBG plants also in order inflow.
Thank you so much.
Okay, sir. Thank you.
Thank you. The next question is from the line of Pankaj Kumar from Kotak Securities. Please go ahead.
Thank you, sir. Congratulations for a good set of numbers. Sir, my question is more related to the previous participant question related to implementation of EBP 20. There might be some challenges going forward because of the OEMs need to do some modification, or even the old vehicles need some modification. So do you see any risk of further capex or new capex, the balance capex that we have delayed by some year or something? Any comment on that?
Sorry, is your question that are there likelihood of some of the capex is getting delayed, and what is the cause, you said?
Cause maybe because of the implementation of EBP, we still need to do something because our petrol pump is maybe the fuel dispensing machines might be different for EBP 20 or normal fuel, or maybe some other technical issue related to the vehicles, older vehicles and all.
So I think what we have to, this is exactly what some of the issues that needs to, because up to 10% maybe some of these issues didn't exist, but as we move forward, we'll have to address them comprehensively, not only for EBP 20, but also if we have to go beyond to say flexible vehicle, etc. So CIAM, CII, ISMA, all these industry associations of different stakeholders are currently in dialogue with the ministry, concerned ministries and officials, and I'm sure that we will see a comprehensive and a conducive policy being rolled out, because otherwise it will not, if we don't have the enabling mechanisms, it will not work.
Okay. And sir, my second question is regarding of course, we are creating such a huge capacity on the ethanol side. So how do you see services as an opportunity for us in this side of the business? Are we looking at that as an opportunity?
Yeah. Yes, that's a great question. I think very good question. We recognize the need for bringing our technology and knowledge to our customers, even as they start to operate the plants and not just at the stage of commissioning. So there's a big focused effort right now underway where we believe that we can bring a host of solutions to our customers as they start operating their plants. Now that could come in the form of, on one end could be CO2, biogenic CO2 capture. At one end, it could be O&M services for the plant. It could be performance enhancers that we have a whole host of solutions, enzymes. We'll have yeast. So all of these where we have innate knowledge of what happens to different feedstocks and how can we best combine them together. This is expected to, the universe already exists. The good news is that there's a big market, which is where we have great relationship with our customers. And now our ability to bring all of this in a combined fashion will obviously we will be able to create decent inroads on the OPEX side of customer projects.
And just to extend to this question, so what is the current portion of the services business in our revenue mix?
I would say it is at about maybe about 5%.
And what could be the potential, assuming this EVP20 gets over? So by that time, what could be the potential in our mix, assuming all other?
So the market is very nascent on those counts, and maybe we will be in a position to go 10% and above. Our aim is to start growing pretty rapidly in that space because we believe there's a lot of headroom for growth, and that is the plan that we are rolling out right now to see as to how that business can start growing at a fairly good pace.
Okay. Thank you. Thank you.
Thank you. The next question is from the line of Naisar Parekh from Native Capital. Please go ahead.
Hi, Mr. Shashi and Mr. Sachin. Congratulations and thank you for taking the question. So for the first question is, if you could give a breakup between 1G, 2G, and EVG on bioenergy side for both revenue and intake, that would be useful.
Myself, from our what I can say presentation point of view or the monitoring point of view, we generally consider bioenergy as one segment. We have not yet started segregating this segment into 3 or 4 buckets the way in which you are asking for, and that's the reason why we basically gave a number for the bioenergy segment all put together.
Understood. The reason, if you can even give some directional context, because
directional context, we always maintain that the way in which because these 2 segments, basically 3BG and 2G, are still in a very nascent stage. We said that they will be graduating over a period of time, and once they get into a little, what I can say, consistency kind of a mode, then we will be in a position to talk about them in a separate way. Otherwise, there is no point in talking for 1 quarter, then next quarter nothing. It has not reached to that kind of a maturity level. We can start giving you the different numbers for this segment then. So wait for some time. The market is definitely developing, seeing the development on 3BG and 2G both. Please wait for some time, and at the opportune time we will start talking about separately.
Got it. So around 18, so is it safe to assume of the order intake 80-90% still would be 1G only, roughly?
So it unfortunately on a quarter it keeps on changing. Yes, right now there is a huge influx of order on the 1G side. As for the earlier participant, Shishir was making a mention that there is no CBG order in this quarter. So yes, on a quarter the numbers might look very different. And yes, currently 1G is the one which is dominating this space.
Got it. Understood. And the second question is on margin.
Sir, I'm sorry to interrupt. May we request you to come back in queue for follow-up questions? Thank you. The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yes, Dhanyavad sir for this opportunity. Sir, firstly, when we look at your consolidated numbers, the increase in revenue, with the increase in revenue, there is a dip in margin. So if you could explain what goes into the consolidation and the reason for lower margins when we look at the consolidated numbers.
Mr. Saket, sorry, can you please just little bit elaborate your question? I didn't get your question.
Yes, sir, I will repeat it. Sir, when we look at the standalone numbers, the revenue stands at 667 crores and the PBT at 53 crores, wherein for the console number, the revenue is at 730 crores and the PBT is 54 crores. So would like to...
This quarter, we have not seen major contribution coming up from our subsidiaries. And that's the reason why you are not seeing any kind of a difference between standalone and the consolidated numbers.
Okay. No, revenues have increased, sir. There is a 10% increase in revenue, but I think that the costs are higher. That is the reason. That is the only reason.
Yes, that's right. Because in the subsidiary, this time we were only having the execution activity going on and not the supply portion, which has played a role, especially into PHS segment. And that is what has contributed in not having the corresponding margin coming in.
Okay. So going forward, this will even out, sir, because the costs have been built in this quarter.
That's right.
Okay. Sir, and you earlier explained about the higher raw material cost, especially on the stainless steel front, affecting the margins, and the pass-through was not easy. So now with this correction and the prices remaining lower, do we see an incremental increase in margin on the engineering segment, especially in terms with the stainless steel prices, which forms a good portion of our raw material?
Yes, we expect that this softening of the commodity prices, which has now started happening, will have an impact. But in our kind of a business, you please need to understand that there will be some kind of a lag effect. So all this downfall which is happening in the commodity prices, we will definitely see, and earlier also we said that in H2 we will see this impact coming in when the old orders which were at the high, getting executed at the high commodity prices will come down and the new orders will start getting in from the execution side.
Okay, so H2 would be a better...
Saket, I'm sorry to interrupt. May we request you to come back in queue for follow-up? Thank you. The next question is from the line of Ayusha from Investia Danya. Please go ahead.
Thank you for taking up my question, sir. Am I audible?
Yes, you are.
Sir, I wanted to ask what's the development on the diesel blending front with ARI?
Sorry. Could you elaborate your question, please? What blending you mentioned?
Diesel blending. So, what is the update on the diesel blending from the with ARI?
Are you saying what's the update on diesel blending? Have I understood the question correctly?
Yes, sir.
Okay, so there's nothing new that has happened in 2 months, but you will see there is a thinking now going on to see, because that itself, when we started to dive deeper into this, there are very different segments and different standards that are prevalent for diesel engines. For example, stationary engines have a different norm, railway engines have a different norm, automotive engines have a different norm, telecom towers engines have a different norm. So we'll have to, as we started to dive deep, but this is something on which work is continuing, and we will see that mentioned last time also that is something which is about 18 odd months kind of time cycle, and so that would probably take it towards the end of next calendar year. That's when we should start seeing this.
Okay, sir. And sir, my next question.
Overall, I'm saying there will be actions in between, but overall you will see it at that moment.
Okay, sir. Sir, my next question is on the SAF front, Sustainable Aviation Fuel. So I wanted to know if is there any traction we are looking from at that front on a company-wide level?
Sorry, could you please repeat the question?
My question is on the Sustainable Aviation Fuel. Is there any update on that front from the business point of view, and is there any traction we are looking at?
So, as I was mentioning, Sustainable Aviation Fuel is something that is beginning to attract a lot of attention globally. That business has a little different business process and model compared to, say, ethanol. So there, the first stage has to be an offtake agreement signing from the airline. Right? That's very big because they are the only consumers for this fuel. And then, apart from the fact that there are standards and norms to be followed, etc., etc. But having said that, so a few pathways have been now approved internationally, and pathways are the technology processes that you use. Alcohol to jet is a prominent one among them, where 50% of the blending is allowed. Right now, that's the maximum blend that is permissible. In United States, we are seeing traction building up because some of the US airlines have actually signed up for offtake agreements, but all these offtakes are not now. They are in 25 onwards, not right now. Of course, the capacities will also take time to build. So we will see this activity space actually coming to fore, although right now there was a thing around clean skies and policy environment and initial airline signatures. The volumes are very large. Several questions will have to be answered in terms of what feedstock, waste capacity, what norms, how much blending, what are the clean sky norms that will come into play at what moment in time. So there are different dimensions. The whole policy environment which will regulate or enforce use of blended fuels. As we go forward, you hear more and more about it. And one clear indicator there is that since the purpose is to reduce the carbon footprint, any fuel which has got a lower carbon footprint will have a higher acceptance, and that is where we were mentioning that the second generation ethanol, low carbon ethanol, they will become the preferred feedstocks as we move forward.
Okay, sir. Sir, on the CBG side, can you just comment on what is the cumulative order book Praj might have completed or is under execution till date?
It is not audible. The question is echoing, so we are not able to hear you very well. Could you be a little slow down and tell us? We couldn't hear your question at all.
Am I audible, sir?
You're audible, but sometimes there's a lot of, what should I say, vibration in the voice.
Sir, I wanted to know that on CBG front, what is the order book that Praj might have executed or is under execution till date?
I had earlier mentioned that we are not giving this breakup between the bioenergy number as of now. We will start giving it the opportune time. 3 orders are already executed. That's what we mentioned to you. 1 order is under execution. That's what we can tell you, but not in terms of the rupee numbers.
Okay, sir. Okay, sir. That will be helpful. Thank you.
Thank you.
Thank you. The next question is from the line of Chandramouli, an individual investor. Please go ahead.
Hello, sir. Normally, I see whatever is your Q1 end of the order backlog numbers, you will be able to achieve that as a sales in the rest of the financial year. Now, at this point of time, Q2 backlog order is about 3,200 plus crores. Is it my fair assumption? Can we expect the same this financial year also?
Sir, the 3,200 crore number is correct because that's the fact. We will have to repeat our performance, as you rightly said. That is the aim that we also have. And the thing is that we need to execute these jobs in order book in line with what customers expect us to do. The way their project finances are, the way their project schedules are the way their overall site preparedness is. So there are many factors that walk in. But in general, right now we don't see any reason to think otherwise.
Okay, because normally if I could see your Q1 2020, Q1 2021, whatever the backlog that which you had, approximately you could be able to achieve it. So if that is the thing, we are heading towards a top line of approximately close to 4,000 crores this year.
Chandramouli, the thing as I was mentioning is there are also some other changes that are taking place. And I was mentioning, for example, in our PHS business that now we see a traction building on the fermentation side. Now, just to share with you, while a water treatment plant order, if it comes, I'll execute it on an average in 12 weeks or even less. A fermenter order, on the other hand, could be 12 months contract. So it's a wide array of technologies that are at display. I think some of that changes will also have to be factored in. And we will have to see how we end the year. I am not in a position to tell you exactly the number right now because that's not the way we sort of provide guidance, etc. But a good, healthy order book is the first thing that we need. I also mentioned that in my opening remarks that this was a quarter that actually proved to us that our execution cycle, our capabilities and capacities are robust to take us forward in the year in a very constructive sort of fashion. And because that was the first requirement, if we build the base, then we can obviously build the building, and that is our attempt.
So I totally understand, sir. So again, maybe I'm repeating. At least do you have the capacity to execute all these orders?
Yes.
Okay. Thanks, sir. Thank you.
Thank you.
Thank you, Mr. Moll.
The next question is from the line of Mahek Talati from Yellow Jersey Investment Advisors. Please go ahead.
Hello.
Yeah, one more time.
Yeah. Hi everyone. So as the Transport Minister had made a huge statement of running all the large number of vehicles, ethanol-based vehicles by 20.
We can't hear you, Mr. Talati.
Yeah, can you hear now?
So maybe a little better, but I just couldn't understand anything that you said. Sorry for that. But you're very clear.
Just a second. Can you hear now?
Yes.
Yeah. So the Transport Minister has made a huge statement of running a lot of, huge amount of vehicles, ethanol-based vehicles in the country by 2025. So are we making doing enough capex or taking any steps to capitalize the opportunity?
So Talati, I was mentioning to Mr. Chandramauli's question as well that we saw this quarter as a proof of the fact that we are in a position to execute improved and large volumes at short notice, and that is and relatively short notice, and that is something that has not happened because we just acted in 6 months. We have been acting in direction with what developments take place in market, and because you and I know from experience that capacity creation takes time, both in terms of getting the right people and knowledge on board, but also the fact that I have to then create an executing infrastructure that can do both the manufacturing part, but as well as the project execution commissioning. So right now we have put in place a mechanism that allows us to see, and if we see further improvement in the market, we will also, as I was mentioning earlier, we expect better traction going forward even in the export jobs. We will continue to, so we now understand the model that we need to follow internally to augment our capacity and capabilities, and we'll continue to do so.
Okay. Thank you. That's it from my side.
Thank you.
Thank you. The next question is from the line of Tanvi Bhandari from HEM Securities Limited. Please go ahead. Sorry, HEM Securities Limited.
Hello, sir. Congratulations on this set of numbers. Sir, just first of all, I wanted to know about the government plans and how we are in line with the talk that length about the CBG and the engineering business.
Sorry to interrupt, but we are not able to hear you very well, Tanvi.
Am I audible now?
Yeah, can you get a little angry with us? Understand that? Can you get a little louder, please?
Yes. So one thing, sir, I wanted to ask that you earlier mentioned that as per the STATAT scheme, there was 5,000. The target for CBG was 5,000 CBG by 2023 to 24. So is it now possible? And second, again on the ethanol blending program, I just wanted to know, so what is the current update in terms of what is the opportunity that we anticipate with the existing ethanol blending target of the 20% by 2025?
So on the Satat plant, the plan that government had, obviously, we are not a country that is using gas as a significant source of energy in our overall energy pie. We have been a very liquid and solid energy sources usage country. So introducing gas itself is a challenge, and that is what was recognized. So I think, and this is the first program of its kind anywhere in the world. So there were many firsts that got associated with it, and obviously that has delayed the program a little bit. So I don't think 23 will have 5,000 plants. That's a difficult one to achieve. However, what is important, and as mentioned earlier as well, that there has been very active dialogue with all the industry stakeholders, and that has allowed the government to also introduce necessary changes and amendments to the policies that were already announced, as well as supporting programs around the policy. Now, with the stepping in of the large corporates, we see a good ecosystem building. There has been what I would call as demonstration projects that have already been done at commercial scale. So these are the elements of the ecosystem that are all now falling in place, and therefore we should see a good traction build as we move forward. Whether it be 5,023, that's a little tough one, because I think we may not have capacity to build 5,000 plants in a year's time frame. But obviously this is a positive movement forward, so maybe 2-3 years delayed, but is definitely going forward. On the ethanol front, I think the capacity that is getting built, and I had mentioned earlier, around 500 odd crore liters will still have to be built to meet the EBP20 target.
Thank you. The next question is from the line of Keshav from Rexen Investors. Please go ahead.
Hi, good afternoon, sir. Sir, I just have one broad question. The bioenergy in material space, if we see, is growing rapidly. It will grow for a pretty long time. But there are also a lot of positive disruptions happening on the technology side. For instance, CRISPR-edited algae for better lipid, modified yeast for pre-treatment chemical resistance. So, to exploit our competencies of process and systems engineering, are we working on some of these early stage projects which say, planning to work with biotech companies that develop these cell lines, build a system together with them, and then out-license these systems going forward?
So maybe I will also attempt a broad answer, as this is a very broad-based question. So we understand that there are areas where we will need to partner with external companies, external or organizations external to Praj. And we are very open to that, and that is a dialogue that is constantly on. We are already working with several companies with whom we can co-develop, if I can use this word, or add value to what they've already done, take that and add it to the next step and bring it to a commercialization stage. What capabilities and capacities we use depends on what's the value proposition that needs to get defined, and that's an area that we are working on. But I won't be able to tell you names because our agreements with them do not permit us to say so. Wherever it is possible, you will clearly hear about it. For example, when we introduce a salinity technology which takes care of softwood and forest waste to ethanol conversion, and we work with SECAP, that was at some stage it was allowed for us to speak about it, and we are going about saying that that's a new offering from our end along with SECAP. So as and when a development takes place, we'll keep you informed. But yes, that is also part of the way of life at Praj.
All right, sir. Thank you.
Thank you. We will take the last question from the line of Priyesh Papriya from BNK. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. Sir, I just wanted to know regarding the ecosystem that are actually building in circumspect to...
We can't hear you, Priyesh.
You're not audible.
Hello, can you hear me now?
Yes, but let's try. But we couldn't hear anything at all what you said earlier.
So is it better now?
Yes, better. Tell me, go ahead.
Yeah, so thank you so much for the opportunity, sir. I just had one question regarding the post building around start stuff, because we are seeing action from last week.
Sorry, Priyesh, you are breaking up. I can't hear you at all.
Yeah, 1 second. Can you hear me now?
Yes.
Yeah. So I just had one question regarding starchy-based feedstock ecosystem, because we are seeing more traction in the quarters, and almost 60 to 70 to 70 to 80% of our order inflow is coming from starchy-based feedstock. So I just want to understand the availability, the supply side, basically supply side of the starchy-based feedstocks.
So right now, we don't see that to be a challenge. We have, I think the country is sufficiently provided for the starchy feedstock, and to meet the goals that are set out in EBP20, we don't see a problem at all.
Thank you. That was the last question. I now hand the conference over to the management of Praj Industries Limited for their closing comments.
Thank you everyone for your time today. In case you have any more questions, feel free to write us at info@praj.net. Thanks again for your time and have a nice day.
Thank you. On behalf of Praj Industries Limited, that concludes this conference call for today. Thank you for joining us, and you may now disconnect your lines.